brought about an interesting array of ideas from contestants all over the world. One such idea centers around the number 108. When this value gets placed into the weighted moving average indicator located on your Dukascopy Forex platform, we begin to witness some remarkable price volatility around the areas where the indicator draws its squiggly lines. Stranger even is that this phenomenon repeats itself on all time frames. Let's have a look at the highlights in relation to this observation from last week's trading on the Euro-US dollar. This week on the Euro-US dollar pair, we see phenomenal bounces from the 15 and 30-minute 108 weighted moving averages. The 15-minute line rejected bearish advancement on Monday morning's London session, and massive amounts of selling was brought to a standstill during the New York trading session by the presence of a 30-minute 108 support. What followed was a powerful rally back to the London session open and a drop back towards the 30-minute line to test again during the Asian trading hours. Tuesday Asian session saw the 30-minute line give way to the hourly candle, and it seemed as though selling would resume. We saw wonderful pullback confirmation of the possible sell from the line of the 5-minute chart, as well as price not being able to close above the all-important 30-minute line. And what followed was a 50-pip drop down towards the 1-hour 108 average. The 1-hour 108 average held a tight range for about 4 hours until the London Open brought large amounts of buying to the market. This was seen by the 1-minute line being broken by a massive 13-pip candle. What followed was a rally of more than 130 pips, which was momentarily stalled by the 30-minute line. However, we witnessed a pullback to the 1-minute line, as well as pullback confirmation to the 30-minute line, which confirmed continued buying and giving massive amounts of confidence to the bulls. This bullish trading action ended at the daily R2 pivot. This formidable resistance line then gave the bears the power they needed to drop prices by 80 pips. Then stopping at the 15 and 30-minute 108 weighted moving averages and swiftly rallying upwards to the open of the previous 1-hour candle, where the bears took hold again after the 8-hour Asian market range was broken to the downside. However, the 30-minute 108 line stood strong, driving prices back towards the weekly highs during the London trading hours. Price returned 3 times on Wednesday to the 5-minute and 15-minute lines, only to be pushed upwards back towards the weekly highs. New York session saw prices fall violently, only to bounce with twice as much velocity right back to the session open. Then prices dropped 94 pips to within 20 pips of the 2-hour 108 moving average in the Asian trading session. In mid-session trading, we saw positive bullish confirmation coming from the 1-minute line and the 5-minute line after a strong push downward of the 30-minute line. What followed was a 71 pip rally to the weekly highs for the 4th time this week. This trip into resistance caused the pair to drop by 146 pips, coming to rest 10 pips shy of the 3-hour 108 weighted moving average. And once again, it was pullback confirmation from the 1-minute line that signaled the start of a 100-pip rally back into resistance, where the pair stayed for 14 hours in a large range market until making its descent after pullbacks were confirmed on the 1, 5, 15, 30 and 60-minute lines for a massive 76-pip drop back towards the 3-hour line, which held price from falling further. So far, we have seen this observation of the 108 weighted moving average doing wonders for traders on the Euro-US dollar pair. Next week, we will check in with what's happening on other major pairs. Thank you and good trading.